What's happening, guys? I hope you had another good weekend. We have another Sunday scan for you today. First and foremost, before I forget, for those of you guys that made it through part of the video, last week you saw the opportunity to basically get something free. So I'll probably kill this name, but Shigozi Truth is the winner for this Sunday scan, and we'll ship you a Momo Traders book. We'll be doing different things every single week. So some weeks we'll be doing t-shirts, some weeks we might do, Centerpoint sent me some t-shirts. So we might be able to give some of those away. And then once a month, we're going to give away a month of Investors Underground to those that leave a comment to kind of share what their biggest takeaway was. And the reason for that is because you know, I say a lot of things, and I don't know what always sticks out to you guys and makes those aha moments. And if you guys share with me where those aha moments come and your biggest takeaway from each of these scans, it allows me to know where I need to focus a little bit more to kind of maybe explain things further, or at least engage with the audience a little bit better. Because the last thing I want to do is just kind of, you know, make no sense with what I'm talking about when, you know, you guys have the opportunity to kind of mention and give feedback and things like that. So once again, if you leave a comment on this video tonight, we're going to pick next Sunday scan, and whether it's a t-shirt or you know, something else that we're going to give out each and every single week, we're going to give something away. And then, like I said, once a month, we're going to give away a month of chat. And probably towards the holidays, we'll probably do even more. So it makes it a little bit more fun and engaging with you guys for taking the time to, you know, watch this video. Last week was really nice. I did have one mistake on AMRN, which I think was Tuesday, where I had you know, phenomenal entries on the short, phenomenal covers, literally at the lows each time, and once again, phenomenal entry into the push, and it started to kind of break down. And you know, I shifted from big share scalp type mode, where I need to be one step ahead and covering when it looks the worst, to, all right, it looks pretty bad. Let me see what it does, and let me try to let this fade. And long story short, it didn't quite work. And then what happened is my stubbornness took over. And the problem is when you do when you get stubborn with size, things add up quickly. So you know, I had a really nice day going with the prior 2 or 3 trades on AMRN, and not only did I give that back, but then I lost more. So it was frustrating that, you know, I did do that, but it's a learning curve, you know, no matter where you are in this game. So as I'm starting to scale and scale and scale, you know, there are things that you start to learn, because all of a sudden 40 cent, 50 cent moves become major P&L swings. So at any rate, that was pretty much the worst of it for the week. I mean, the majority of the rest of the action was fortunately no headaches, and some really nice opportunities, especially on Friday. But I'll go over a couple of them, but at some point I'm going to try to put together a little bit of recap as promised from Friday. But you know, these earnings plays, all I'm doing is looking for the biggest gappers, and the ones that have range potential, something that is either, you know, gapping into resistance, or something that's gapping over, or excuse me, under prior support. And if we have any of those two, we have potential opportunity, especially with the range that's been going on in this market. So with that said, let's get right into scan, and I'll go over kind of my game plan for this week. But you know, kind of what I say every single week is, this is not just for tomorrow. The idea of scans is to generate ideas, and also, you know, when you look at these, you're going to remember where they were at. You're going to notice things. You're going to notice key levels. So that way, when you see them on scan, you can react that much faster. With that said, WKHS, I think, was the example that I used last week, and it was just from going through scans and seeing that name recently that I was confident in, quote unquote, chasing a particular move that I saw when they ended up buying the plant that they were, in negotiations with, or whatever the case was. But had I not been familiar with that chart, I wouldn't have been able to make that trade that ended up, running about a buck per share. And I was able to react that much quicker, not because I was prepared for it that day or the prior day, but just because I was prepared in general, because I had seen the chart in the week ahead or the week prior. So last thing before we get into scan, I did a blog post on APDN. And it's very rare that I am a broken record and kind of warn people against either chasing a breakout or getting long something. And I think really the last huge disaster that we had was PSTV. And I think it went to about 14 or so, 13, 14, started to pull back, went to 12. It started to kind of fade into 11. And midday they dropped an offering. And people say, oh, it's fine, I just stop out. I'll put a stop. It doesn't happen that way. Sometimes you can't get a fill. Sometimes there is no market for you to even exit. Sometimes your market exit might be a couple bucks lower. And in a case like PSTV, when the offering came midday, there was no way to get out because it went down into a circuit, into another circuit, into another circuit. So everybody's panicking and market selling and margining out. And it actually went maybe 50 or 60, 70 cents lower than the offering price itself. And so that is exactly why I was a broken record on APDN this week. And some people like to say, oh, you're getting squeezed, it's going to the highs, this and that. I'd rather wish I was in the trade than wish I was not. And that's kind of, anytime I do a hashtag know what you own, it's because the risk are real. And, longs got away with being long that day. And I think that was Wednesday, either Tuesday or Wednesday. They got away with it that day because they didn't do an intraday raise. However, that next morning they did it at 5, plus warrants, whatever it was. So the stock went from 19 at the close, open around 15, faded, or pre-market anyway, faded down to 11, 10, and then they hit the offering for 5. So we all knew that it was only a matter of time based on the filings, but knowing that should cause you not to be long. And if you were long, that sucks. It's a good way to blow up your account. We've all been there. We've all done that. But my point with this blog post is, are you being reckless and you don't even really know it? And one of the points that I put in in one of my tweets this weekend was, everybody is always like, let's go over your losers. It's the biggest thing you need to do. You can learn so much from your losers. But what happens if everything is fine with your loser? You took it off. You respected your stops. You did what you did. But your winners are actually kind of hiding something, right? And I had a kind of a wake-up call on Friday on I, the symbol I. Now on Thursday, I was pretty aggressive with it. I was pretty confident in the trade. I saw a seller in the tape. I saw somebody continually just literally unloading a major position. So I knew that, all the rebounds were just kind of low volume on air because the seller laid off. So basically when somebody's liquidating a position, it could ramp up and on air. And as soon as they start to press, obviously it's going to come back in. So a lot of times, once the volume slows, you need to have a little bit of a relief rally, right? So when you get that relief rally, everybody starts to buy the bounce, the liquidity comes back, everybody thinks, all right, we're going to go higher, and then they start hammering away again. So that's what I saw, but it did one more push than I expected. And not that I was sized up at that time, but I sized up right after it. And what woke me up on Friday was that, had that headline that hit on Friday happen on Thursday, I'm not sure how I would have handled that trade because I was in quite a few shares. And would I have been okay with a buck or a buck 50 against me? I would have sucked. But reviewing that win that I had on Thursday and even Friday, it makes you rethink, your strategy, not necessarily the strategy, but the size in which you're using. And no matter how confident you are, make sure you actually have a padding. So the point here is go back and review your winners and make sure that the way that you got from entry to exit was actually safe. And if it wasn't, find out how you can maybe fix that for the next time. So that was kind of my thought on Saturday morning for people to kind of try, because we all go over our losers every single day. I do a trading recap for members, and I go over my wins and I go over my losses. But I don't go over, regularly, what did I do wrong with my win? And I think that's a very important point, and I think that if you guys do that, you'll realize that you might have gotten away with a lot of things that you shouldn't have, and at some point it will catch up. So you can be reckless, and it will work, but at some point it's going to catch up. And that I'll save that conversation for another time. I do have a great example of two traders that I know, and one that I caught up with, and one that he made choices after being reckless to keep it and learn from how he was being reckless, and he's been on fire, just totally changing the way in which his trading has been, because we had a good conversation about a very well-known trader that I know that gave back a lot of what he had made because it finally caught up. So anyway, let's get into Scan. JD was obviously the big one for Friday. Kind of looking left, you can see failed, fall through momentum, ramps up to 35.50s, ramps up out of the gate, slams right back under 35. So for me, my goal was to lean on it, and lean some more. And that's basically what I did throughout the day. And anytime that it started to kind of go sideways, I went ahead and sized down a little bit because I can always re-add more. I'd rather be safe than sorry when it ramps back up, because I put on size anticipating a flush, and instead of flushing, it started to just go sideways. So that's where I need to scale down. That's where I need to take a break. JD on Monday, I'd be looking for maybe a push back up towards the 34 level, 30, 33.80, 34, and then a potential backside move. I was pretty patient with this this entire fade throughout the day on Friday. I was very in tune with it, and I covered into the flushes here as posted. I'm sure most of you guys had seen that chart, but the fact that I traded it so well on Friday, I need to be aware of that on Monday, because I don't want to just think that it's going to do the same thing again. A lot of times there's 1, 2, maybe 3 days max that you can really press a trade around an event, such as earnings or some type of news, and then you start to get into that chop. You start to get into the illiquidity, and your edge starts to get smaller. So what I want to do is just be aware of that. I want to watch key levels, and we'll see what happens off the open. We don't know if we're going to gap up 200 points or down 200 points on Monday, or flat. But the key is going to be trend join for me, noting the key levels. So you've got 34, and you've got probably 33.75 as potential resistance. But for me, 9:45 a.m., 10 a.m. plus trend join, whether that's long or short, I don't care. But it basically went right into daily chart support of 33 over here and bounced. So the key for me, if I was going to size again, is get on the right side of the trade and wait for 35 to confirm a few times before backside holds and unwinds. So higher the better. Backside is goal. But again, sometimes you get that gap up, forces everybody to sell off, and then they just kind of carry on onward and upward. And don't step in front of these things, because just like PDD, these things can really go. So I prefer a short on JD, but I will not size unless the trade is right. So I would encourage you guys to go back and check out that JD trade that I posted on Twitter and Instagram. And you can kind of see how I scaled into the winner, scaled down when it was going sideways, scaled back up when it stayed heavy. AIHS. Now this one, I'm not so much interested tomorrow. Maybe depending on what happens. If it were to gap up and it kind of ramped up into the 120s, I'd look for potential fail and fade. But I think we're going to need to wait a day or two and kind of see what happens, see if they put another PR out, anything like that. But for the most part, I think the stock was 40 cents. It opened at a buck, ran to a $1.50, $1.60, and pulled back. Every single long that bought on Friday is upside down for the most part, minus the pre-market buyers, which they're probably long gone. So pretty much every trader is upside down on the long. Shorts got paid into the close, and for those of you guys that didn't recap that either, I traded it from 93. I added a whole bunch, stopped a tiny bit, re-added, and sold 160s. I had a little bit left, bailed, and then basically faded the trend. The reason for that is because each time it kind of came up here and tried to break out, they were selling. And where it should have broken out, it should have been thin, there was a lot of volume that crossed the tape. So that's where I got my bias from. A lot of people were asking that, but we discussed it in the room. And it's something that you need to have screen time for to really kind of understand that. So if we're going to have a big trade coming, I would compare it to BNGO. And if you go back and look at the BNGO, day 3 it had a huge move. This is a little bit different though. But it just goes to show you that if something just dies off, there's no reason to cover, right? And then all of a sudden if they have a PR, it gaps up, there's a reason to cover. So even if this fades off 90 cents, 80 cents tomorrow, if it has news on Tuesday or Wednesday, just keep in mind how many people are on the right side of the move, on the short side, but have maybe a 120 average or something like that. Maybe a 120, go back to it. Say everybody's kind of sized in at 120, 110, right? So if we start to continue to fade and we end up basing at 80 cents, 90 cents tomorrow, maybe a little bit of a flush comes back and it starts to consolidate at 90 cents. And then all of a sudden we have news and we're over 120 on Tuesday, Wednesday, then we have a potential of a squeeze here because they loaned out a ton of shares, and I would imagine that the average short probably didn't get involved until 130s, 120s, and so when it recrosses 120, they're going to be emotional. Really nice read on Friday. I shorted these ramps. I covered into this flush. I reshorted it, and I lost a little bit. I covered around the 1440s. And then I started to redabble small, and then I scaled on this backside. And at 15, as I said in the room, I was looking for 1380s to 1350s. And I might have looked crazy, but ended up flushing out just because that seller kept on refreshing. Unfortunately, I covered best price around 1370s, and then it ended up fading under 13. But higher the better. And again, this is just like JD. I don't want to keep on going back to the well that's been paying so well. And I need to be cautious of getting overconfident because it's been working well. So I want to take a break here, make sure that the trade comes to me, and if it doesn't, then I'll ignore the trade. But we've had three good days actually of serious volume. Now this does not remind me it doesn't remind me of overstock in the sense that the company itself. But the price action is suggestive of somebody completely unloading a position. And typically what happens is it stays afloat for a week or so, starts to go sideways, and then if it fails to rebound, we're getting that second wave of selling. Everybody that bought the bounce, anticipating it to go to 14 or 15, is now going to bail if 12 breaks, and it's going to flush it down to 11, 1150s, maybe even lower. So that's what I'd be looking for on a trade like this. I want to be patient. And another recent example would be something like STC, where everybody plays this bounce and it fails, and then the next flush comes. And we've done that a few times here, right here. So you figure like this is flush, 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 starts to rebound, fails, squeezes out, fails, and then everybody that just bought that rebound now bails, and sends it to new lows. All right, next is AMRN. Now, AMRN had some positive news on Friday, as expected, and nice breakout. It's not something that I want to be aggressively short, but if there was a parabolic move, if there ends up being rumors again, things like that of different speculation type plays, then I would probably trade that move. I didn't even touch it on Friday. It did a nice little gap and sell off red. But the rest of the day, it was just sideways, nice little grind, ABCD for the breakout. So, great volume. It stays on radar, but I'm not heavily biased in any one direction. I just want to look for that trade. Just like, for example, LK, which I'll go over after. But, there was two opportunities that I was interested in on LK. And, other than that, if you weren't long, then, there's no reason to stay short. So, point is AMRN, higher the better. Look for the opportunities when it starts to speed up like this, but I'm not looking to marry it short. I'm not looking to marry it in any one direction. I just want the price action to be able to take advantage of. And just like I said when I started this today, the key is just to trade it. Don't turn a trade into let's see what it does and potentially turn it into a bigger trade. No, take advantage of the moves, move on, look for the next one. That's my only goal with this. Teva, this was from Scan last Sunday, and the goal was dips for a breakout. I would continue to be watching for that. This was one of those ones on the biotech scan that I was curious for a potential breakout, thinking that we could get one near term. I think that it's been a long time since this has ran. It's gone from 650 to 10. It is a big move, but I would remind you that that's a big move, but I also wouldn't be surprised if we see it continually squeeze out. So basically, I want to trade either weak opens for that breakout move, or just pray that it keeps on going higher and higher and higher and higher, and be able to take advantage when it turns. This is a trade that has a lot of volume. It's a trade that has a lot of liquidity, so I will be looking for that trade, just like I did on AMRN or LK or even Roku. Any of the days that it has that edge as a trader that's watching it to trade it, versus a day that it's just kind of going sideways, la-di-da, not really doing too much. Roku is nice, still great bullish trend here. You can see all higher lows, nice breakout, ABCD type breakout there, and then failed off support flush. I traded this one on Friday. It was a pretty nice one. It started me out pretty well. I was short in the pre-market and then shorted the open. Covered the flush, and that's it. Just like I said, we're either going plus or minus, $1 or $2 real fast. So if you get the trade, if you took it, great. Make sure that you treat it as a trade. Don't try to marry it. And then I traded the pops to the drops. There was this flush right here I missed, so I was like, I don't want to get in a situation where I'm fighting this thing throughout the day. So I made sure that either A, I had a stop plan, or B, next time it flushed out, I was there, and that's exactly what I did. So I traded it well. You can't just pick one spot. This is a 3, 4, 5 entry kind of thing where slowly scale. Okay, do you have too much on the front side or not? And then once it starts to prove you right, at that point, I like to scale. And then make sure that I size down into the flushes until it starts to trend change. And it did not trend change throughout the day, so therefore I was continually just scalping the trend. There was no reason for me to scale into a winner. LK, this was the trade of the day, I would say, on Friday for many. The idea here from Scan, as I had pointed out, was 22 break. 22 break for the move. And I was thinking that we could go into a multi-day move here. The reason for that is because we had a lockup. A lot of the prior IPO type guys had the opportunity to finally sell. They also, it coincided with the earnings. It gapped up. It didn't sell off. So the last thing you want when you are trading this lockup thing, just like Uber, everybody just got short into the Uber lockup. It worked like a charm. You know, you made $2 a share. It was free money until it's not. And all these guys got screwed trading the lockup thesis because it didn't pull back. And so you got the wicks. It got bought up off the dip, and then rip. And so the reason why I was interested in that breakout is you look left, and you can kind of see we've got 22 top here, 22 top here, 22 top here, 22, 22, 22, 22, and right here. And then we have two dip buys where flush out, rebound, flush out, rebound. Well, guess what? If it's not going down and everybody's short into the lockup, where do you think we're going to go? That short trade's going to unwind the other way, and we're on to 52-week highs. So really big opportunity. The one thing I would be careful of here is getting too biased, that it has to continue to break out, that it has to do something, because if it doesn't, you're going to be, on the wrong side of the trade for a couple bucks. So weak opens, potential rally back red to green. Otherwise, gap up, shove, look for failed follow through momentum. But I wouldn't be surprised to see this kind of consolidate for a few days. Wouldn't be surprised to see, a dip and then close green, a dip and then close green. Kind of like what we've been seeing on PTON. So PTON kind of, see how it pulls back, breaks out, pulls back, breaks out, pulls back, breaks out. These are the wicks that we talk about. That's what I'd probably anticipate seeing on LK. And if we do see that, then I would be continually getting long. However, on LK, if we gap up and we rip out of the gate, a buck or two, then I would probably fade that. Not to marry it, but just anticipate that one flush and move on. Piton. As you guys, anybody that's watched the last 4 scans on Sunday Scans knows where I'm at on this. I've said it, here. I'm swinging it long. I've been, as I said, I gave you guys my thesis as to why. The numbers just make kind of sense to me in not even from the company standpoint, but just the percentage of the float that's short. There was also a couple of disastrous IPOs that came out right before this one. And so, for the most part, you probably think that they don't want to screw it up. And so it ended up opening, $2 lower than they had priced it. And from that point forward, anytime that happens, it's an immediate short. It's going to, straight down. And so at any rate, I wanted to kind of see it develop and whatnot. And as I said, I was buying weakness. And my goal was to hold it, and ideally let it work. So, we had a huge squeeze out on Friday. On Thursday's scan, I posted, don't be alarmed here if we start to get, couple dollars, $3, $4 back-to-back type days. We were up $3 on Friday almost, and then obviously it pulled back after that squeeze. But this could be the new normal on this thing. If we start to get, through pricing, that's going to turn everybody's head. If we break through that 29, and then 30 is going to start to cause people to think 35, 40. But look, I mentioned about a month and a half ago that I'm closing my eyes until 45. Whether I'm right or wrong, I don't know. But so far, it's been pretty nice, and hopefully you guys got a good piece on it. So it's nice to finally see one of these things starting to really take on, a pretty nice trend. The only other one around that time was INMD. Actually, this was a couple months before, but another IPO that's been pretty wild lately, which is also on scan later. Other than that, BE. BE goal has been dips week opens for 7. And hopefully we get there. If it does start to squeeze out, we have room until 8, until it gets into that gap fill over here. As noted, this was a negative article that had come out. So, it had unwound, but this particular sector has bounced. And with that said, a lot of the other names within the sector have bounced as well. And when you have this sector bounce and you have a lot of short thesis, folks on this, sometimes you end up having too many shorts. And that's exactly, I think, why we're here. And I think that we can continually have a nice move here towards the 7, potentially gap fill, but just don't forget about it. Like CRC. You try to find the top, you miss the pullback. You try to find the top here, you miss the pullback. So the key, in my opinion, is, sure, be familiar with it. Stay familiar with it. You might dabble here and there for the short side. But don't waste all your energy on this front side, because I'd hate to see somebody exhaust themselves kind of trying to find the top. And then you're like, you know what, I'm done with this thing. I've been wrong every single day. And then that's the day that it goes. Just like me on CRC, I was trying it a couple days in a row. Not that it was a bad loss, but I had a brain fart and didn't even look at the sector. Sector was ripping, and, therefore, in my eyes, CRC was not a short. So, I was involved in the short this day, and this day a little bit, but, the good pullback happened, but I was just exhausted from the prior move. So that's the point here on BE. We're going to have a phenomenal trade, but don't get spent before the move comes. And, I'd rather be joining a trend than trying to find the top. INFN, nice breakouts. I did not take part in this one, but it's been on scan for the last 3 days. The goal was, after we saw this snapback day, week opens for red to green. So I would continue to trade week opens with proper risk, anticipating that red to green versus VWAP risk. And then at that point, if it starts to hit a wall after 9:45, 10 a.m., forget it. If we start to gap up and parabolic, then I would be looking for a short. But for now, slow, steady grind. And this kind of action can last longer than you think. CRWD, another one of those IPOs that kind of happened at the same time. Work was another one. They're all kind of starting to bounce at this point, but CRWD, I don't really have a plan yet. But I'd fade a decent gap and push, or potentially get long on a red to green. But more along the lines of being familiar with the trade rather than actually trading it right now. I just want to see this chart, and that's that. Same thing with CVET. We're coming up on some major resistance here, and I think this was a recent IPO too. Yeah. So this had just opened, and I had a 45 all the way down, flushed out down to 8, and now we're getting a nice big rebound. So we are at a major resistance point. And these prior highs were 15s. This prior high were all 1520s, 1530s. So I would basically say 1530s, 1530s. If 15 starts to base, we can start to get into a nice little squeeze. If not, then you might have that same seller in the tape, and we might be heading back. So again, volume's good, but this is not one that you need to be first in my opinion. I think you can be patient and wait for the trade to set up. Other than that, NSYS, this one I wanted for Monday, Tuesday. It was easy to borrow at a few brokers. We've had situations when this particular clearing firm is pretty easy to borrow. Everybody seems to stay short and swing it. This is an example of BNGO kind of thought process as well. And not necessarily that it's the same trade, just that when everybody is up, so it ramped up, squeezed everybody out, and then everybody kind of got short in the 520s range, and then probably, was patient because they were on the right side, right? So all of a sudden we start to go sideways, and we're back to 450s, and there's still no real reason to cover yet for a lot of these people, and they're waiting for a dip to cover, waiting for a dip, and it just never comes. So then at some point, if we get news or something like that, and we start to go, people forget. And this is, I think, 800K, or it's sub 1 million float. So when people forget about that, and then they're patient with their short, all those things starting to compound with one another, plus T+2 type of buy-in type situation. I mean, there's possibilities here. But my goal was for it to kind of taper off and not rebound the way that it did, but it did. So we'll see what happens. But there's not much liquidity here on the offers. If they're buying, it's obviously going up pretty quickly. So week opens, PR support would be ideal, and I'd watch it. Not necessarily the next couple days either, but I want to stay familiar with this chart because I think that it has trained everybody that it's a no-brainer short because it just unwinds. And if they do that on the next PR, then we're gonna get a nice play. And I think everybody's gonna treat it the same. And then it's gonna be one of those situations where it's like, oh crap, it is under 1 million float, and they forget about it, and we go for a nice ride. ASTC, nothing I love, but it held pretty well. You could see VWAP support. I'm just staying familiar with it. 180s dip for 250, something like that. INMD, staying familiar with it. Great trend, steady. This type of situation, you've got a lot of consolidation here. You're over 45. You're getting towards 50. So 55, 60, I'd love. Any big gap up that pushes and fails, I join. But the most important part is the cover. Don't try to marry this. Don't think that, it's gone from 10 to 50, so it has to pull back to 30. It doesn't. Take advantage of the price action. The reason why it's on my scan is we've got some big ranges starting. So the more big range candles we have, the better potential edge is coming. PSB, just a look. It did have some volume this day over here. So if you go back, that was 103 to 150, and it was on about 1.5 million shares, 1.6 million shares. So we had a little under a million on Friday. I'd be watching this one just if it starts to grind. If we get 2 to 3 to 5 million shares, then I'm definitely interested. This is the type that, it's got room in the chart. It's the type that it's cheap enough where it could start to go into circuit halts, things like that. MNI. I gotta look into this, just real quick research. I don't know why it flushed out. I'll look into it after this. As always, my scans are purely technical, and then I spend the mornings kind of fine-tuning what I need to know fundamentally to kind of better my case here. But I want to watch it just because, again, it's a stock that's come down from 7 to 50 cents. These are the type that, it might have just been one person blowing out. It rebounds to $1. Everybody gets short because it's up, 40, 50, 60 cents, 60%. And then we end up going again. So that's what I'd like to see. DTIL, great breakout still. Last Sunday I mentioned this one, Michelle's idea right over here for the 7 break. And we came down on 75,000 shares on Friday. So I got long right over here. Not big, just a little dabble, and added to the winner a little bit. And I just let it work when I was trading other things. And the reason for the trade was that, we're trading millions of shares, these prior days. And then all of a sudden we're down like $1 plus on, I think it was 72,000 shares. So the numbers just didn't make sense to me. And it was probably just one market order, one seller. And once they were out, then you probably get the rebound. So anyway, I got there long. I made it to about red to green, and then pretty much left it alone after that. The last couple, CGC, staying familiar. I don't expect anything, but, you know, we've gone straight down. So everybody's waiting for that bounce. So the second that you see some type of trend forming, I think we can have one of those momentum days where it just starts to build and build and build and build. Not necessarily that it's going to be the rebound or the bottom for long term, but I think that there is just so many bag holders in this thing that once we have that one good day or that one headline or whatever, we'll have that short cover. And not a short squeeze, just that short cover where they'll just provide some support throughout the day and give us a good opportunity. Last couple, SDC, higher the better. Backside, really impressive research by Hindenburg, and you know, they nailed it. I mean, absolutely nailed it from 14. Now we're down, you know, we might be testing 7s this week, so we'll see what happens. And then Kern, not a favorite, but I always kind of try to keep these on watch, because if I don't put it on watch, I'm gonna, you know, blink and it's gonna be $10, $12, and I'm gonna be pissed that I missed it because I didn't put it on radar. So when that happens, I start to look for sympathy type names, and Peck was one that kind of came to mind. It doesn't necessarily mean that I'm interested in it. Same thing like PHUN, if you guys remember. I try to remember things that ran. These were both special purpose acquisition corps. All three of them. I think AESE was another one. So basically, whenever these things, whenever one goes, sometimes the others start to go as well. So again, nothing I love, but the volume's there. And if that starts to double, then I'm gonna go out on a limb and say that Peck probably gets picked up too. So that's it for my watches for Monday and for the week ahead. Again, guys, leave comments, your biggest takeaways, and we'll pick a winner for next week as well. As usual, the key for me with your comments is, you know, it shows me your biggest takeaways and where I should focus. You know, at least these videos and whatnot. You know, what points I should be hitting and things like that. So, all right, guys, have a great weekend, and we'll see you tomorrow.